Hi, my name is Aman and I'm a CPA practicing in the taxation and accounting matters in the Vancouver region of British Columbia, Canada. This video will discuss how debt is forgiven and what are some of the strategies to reduce the tax burden from such forgiveness. Let's take the example of Tom, who had a successful manufacturing business. Due to the recent recession, because of COVID-19 pandemic, he realized that if he does not do anything, his company will go bankrupt. So he made a lot of efforts in order to survive the economic shock. One of the effort was an idea to reduce and ask the existing creditors, that is the people to whom the business owes money, to forgive all or a part of the debt. After several negotiations, he was able to convince some of his creditors, especially his friends who had invested in his business, to forgive a part of their debt. Although initially it seemed like a favorable result for him, his chartered professional accountant informed him that there would be tax implications of such forgiveness under the debt forgiveness rules of the Income Tax Act in Canada. Tom was initially surprised, and on meeting with his CPA, he understood that if there is any remaining forgiven amount after all of the applicable tax attributes such as the cost base in capital property and accumulated capital and non-capital losses have been reduced to zero, then 50% of the remaining forgiven amount will be included in his income for the tax year. So the CPA informed him that depending on his particular circumstances, there are ways to avoid the application of the debt forgiveness rules. The CPA reduced his company's tax attributes to the maximum extent permitted, and he also prepared and filed an election form with the Canada Revenue Agency in order to do so. Since some amount was still left after reducing the tax attributes, his CPA advised him to transfer any remaining unapplied forgiven amount to an eligible transferee, that is, his parent or his subsidiary company. In this case, it was his subsidiary company. This helped Tom to save money by reducing his tax bill, and he was glad that he consulted his chartered professional accountant in this tax planning techniques. The debt forgiveness rules are complex and can apply in a wide range of contexts. But don't lose heart, there are a lot of tax planning strategies and opportunities which are available to minimize the income inclusion to your corporation. If you have any questions or are considering entering into a transaction or an arrangement that relates to transfer, the settlement or forgiveness of debt, please feel free to reach out to a member of Cloudiverse CPAs tax group for further advice to see how the impacts of these rules can be minimized so that you pay less taxes. Thanks for watching and see you in my next video.